Good turnaround Tuesday, Warriors. Hi, Brock. Just Wanth, how are you? Everyone doing okay? So we have the Fed tomorrow. I'll have most of my positions paired or flat by the time the Fed comes. So prior to that, I've done a little scalping, mainly in the crude from Sunday night on the gap higher opening that we had here. Day trade. It went deeper than I thought. We still have a lot of mo. We could blow one more time. And then here's your NASDAQ. Take a picture of this one because yesterday's low was very close to the prior all-time high. That's what this red line, flat line is. And now if you can see right here with this high that we had yesterday in NASDAQ, we're not above 70. So I'm labeling this drive 1 and this drive 2. And looking, maybe we get one more high into the Fed tomorrow. I'll be looking to fade this if that happens for a 3 drive. Back under 97.30, I think the deal is sealed. And then you'll have 94.25 for this uptrend. Kind of a wedge is the way I'm looking at it. And we break down here, we have 8,800 or so. And the wedge is anchored at 8,400, so maybe we see this too. Hello, Ren. This was a surprise to me this week, especially after the kind of week that we had. I mean, closed right at the high. You know, we came right off this moving average. I think it's the 200 day. Yeah, 200 day right here. But I thought after this, the way we closed Friday, we'd have some follow through, maybe try 110. So I call this decisive. The 2-week off number, I thought was, it's all the way down here. So we actually held it. 782. That was 915. Okay, so 782. Look at this, right to the off number. So, you know, these off numbers, besides where you'll have a weekly reversal, you'll see that the market reacts to them. You know, you could use them for covering shorts or maybe trying along if you think that there's going to be some type of recovery here. I can't chase this now, but I'll be interested if we get some type of rally up towards the 109 level into the Fed to look for shorts. And when you have this happening, what usually happens when the yen is doing this? You get lower stock indexes, not a ton. You get higher gold. That's happening. It's negated this breakout. I didn't think this was the bottom, but it's starting to look better. And when I look at the daily chart, you know, you have one here. And, you know, I traded this break and then I traded this break. But, you know, I'm not going to maintain my bias if it starts doing something right. And maybe this is 1 and this is 2, and we're going to have a new high in gold, especially if the yen is on a long track towards some type of breakdown. It's premature to say so, but why can't we have something like this from here? And the other part of the combination would be yields. So yen had a couple of bad days. I wasn't that impressed with what TLT did yesterday with that big yen break. It was up a little. Maybe this was it. And we're heading up. I know Greg is looking for one more high in bonds and notes. Thought that we could work a little bit lower. Maybe that happens when the yen rebounds. So I think the yen is telling us what's going on there. And if you know where the yen's going, you should be able to diagnose a couple correlation trades with it. So I'll be looking for a sell up around the 109 level if we get one in the Fed, from the Fed. So It turned from looking great to kind of crummy. As Steve says, all the false breakouts. I think someone said you're going to miss the end on the long side. Another false breakout. But it wasn't really a false breakout. What it is a throw over. So we've had a couple of these in the end. I thought that was a possibility, Mira, to the 200. Doesn't have to, though. But that was one of my targets, the 200-day coming in shade under 150. But it could have stopped here. And unless the S&Ps recover a ton, I don't see the impetus for it to go back down there. I'll be interested to see what the TLT does when we get some type of rally in US dollar yen. I think this most likely capped it right here. And actually saw a tweet from Jamie Satley, and when he was at the summit, he talked about 4-hour reversals, and I think he pointed out that we had one here on Friday. I mean, there was no way Friday I thought that we were just going to collapse into Tuesday like this. So isn't it nice? The market's always full of surprises. So
yesterday
yesterday
we had a massive bearish reversal.
Yeah.
Bearish engulfing reversal on the USD yen, massive.
Okay, on the daily.
Yeah,
because yesterday didn't show it taking out Friday's high. It doesn't have
no,
to
but for bearish and bullish engulfings,
they don't have to.
the body is what counts, not the wick.
Okay, all right.
Not the wicks.
I don't agree with your definition, but
not mine. It's not my definition.
Okay.
All right. Steve be nimble, Steve be quick, Steve jumped over the candlestick.
Just if it had also taken the high, it would also be an outside bearish engulfing. Now it's just a bearish engulfing.
All right.
Because the body fully engulfs, the previous candlestick.
Blake,
the previous candlestick's body.
Steve has the same first name as Steve Neeson. So, we got to go with this definition, don't you think, buddy? Steve Neeson, the godfather of Americans being exposed to candlesticks. So those are my thoughts coming into Tuesday. Kind of be careful tomorrow morning and kind of pare down. I don't know what the Fed can say or what they're going to do, but it's a red event to me. So what are you thinking here, Blake, on yen? I know you were looking to buy a pullback. Has the magnitude of the pullback in the yen changed your mind?
Oh, hey, I thought I was unmuted. Hey, good morning, Coach.
Good morning,
How are
you
doing?
Good.
Changed my mind for what?
Well, I know that you like the yen and you were talking about looking to buy a pullback. I'm wondering if the magnitude of this decline changes your view about being constructive on the yen. This 2-day deal here.
Yeah, okay, I understand your question. Yesterday's move lower, I think, is a little jarring. I mean, if you're long, in retrospect, I look at my exit on Friday at the 109.55 level and say, oh my goodness, thank God. But if you're looking at the chart though, at the dollar yen, I'll give you a different view just because I have it on my screen.
Okay.
Here's we're in an inverted head and whoops, I didn't mean to do that. We're in an inverted head and shoulder pattern, and we're just back testing the neckline. Now you could argue, well, we broke back below it. Yes, we did, but we're not holding below it. So, in essence, the dollar yen is still holding the 50% retracement and the neckline of the inverted head and shoulder pattern. So, so that alone could keep the dollar yen higher. I think if I was going to, and I'm not trading the dollar yen at the moment. I bought a little euro yen this morning. hold on really quick. Let me just put this back up here. This line back up there. Okay. I think if you are going to be, looking at the dollar yen to be a bearish, reversal, I think you've got to watch a move back below this uptrend line here that, will come in around 107.60. I think that's going to be the level that you have to be careful of, right? The 107.60 level. And, if we break back below that, then I think any type of, potential bullish dollar yen is kind of off the table. Does that make sense, Dale?
Yeah, buddy.
Yeah.
I appreciate it.
Oh, yeah. But overall, what we are seeing is we're seeing the equity markets move down and retrace a little bit, pulling back some of this, bullishness that we've seen. We had really strong DSIs in, the Aussie and the Kiwi overnight. Actually, the S&P and the NASDAQ, they're all very extreme. So to see these pullbacks right now makes a lot of sense to me. But the question is, how long is this pullback going to last? And, there's okay, so I'm going to take a moment and I want to talk a little bit about this concept with you, Dale, if you've got a second. So Ziggy, Dale, you know Ziggy, right?
Yeah.
Okay, so Ziggy posted this article about in our chat room about sports betting and how a lot of traders have turned, or a lot of sports bettors have turned to the stock market because this is where they're getting their quote unquote fix, if you will, is they're day trading the markets instead of sports betting now. And it's funny because several weeks ago, I want to say like a month ago, one of the guys in our office, he likes to bet on sports, and since the pandemic, obviously there's been no sports, and but he follows a lot of these sports betting guys that have turned quote unquote day traders, right? They're buying and selling everything, and then this big a big surge in Robinhood traders. And so basically the point I'm trying to make is that I think a lot of this bullishness that we've seen in equities have seen, it's from a lot of traders coming, bridging the gap, coming over from sports betting, coming into the markets. You can see it in stocks like Hertz, Chesapeake Energy. I mean, Hertz is bankrupt. And did you see this stock, Dale?
Hertz? I know Chesapeake was close.
Imagine if Tesla goes bankrupt. It's going to be at 2,000 at no time.
I know Chesapeake was trading in like, I don't know, 20, 30 cents. And what they probably did like a 10-to-1 reverse split. So now it's,
Yeah, I mean, but this is the company going into bankruptcy.
Right.
And it's gone from 68 cents to, I think it's pre-market. It's trading, hold on, let me see.
$70 or something.
Let me see if I can. Hold on, give me.
CHK.
Wait, no. I'm trying to pull up Bloomberg here for Hertz.
I heard they brought OJ back to do commercials for Hertz.
What's that?
OJ running through an empty airport for Hertz.
Yeah. Well, the bottom line is that it Hertz
is a buy signal
market, and well, there's you've got every trader or every person just scurrying into the market, trying to find different ways to make money in the markets. You've got Robinhood traders, you've got people taking their stimulus checks, putting them into the market, big huge surges in account openings, and so this trading activity that we've seen in the equity markets is a lot what I fear is fueled by a lot of retail. So
amateurs. Yeah.
Well, yes.
Yeah.
And so the question is, or let me ask you this. Let me take a step back, and Steve could probably answer this too. When is a top in the market usually created?
When retail comes in and capitulates and says everything's okay.
And they're buying everything, right?
Yeah, and
exactly.
the trash begins
Floats.
to outperform.
Yep, trash is, floating to the surface. And so look, I don't know if the S&P is going to hit new highs. I mean, you're looking at the NASDAQ 100, and the NASDAQ 100 struggling up, but it's still holding at the highs, right? Let's not ignore the fact that we're still above like the highs. NASDAQ composite. Let me get you the composite.
Yeah, S&Ps look weaker now all of a sudden. They were stronger all the way up, but
yeah, I mean, here's the NASDAQ composite continue around. But let's just see how everything is happening and how the NASDAQ continues to rally. The S&P is making its way higher, and I believe that these little dips that you're seeing in the market are just going to get bought up anyway. Now, one of the things that I believe is in process of happening is the potential of a blow off top, Dale.
Yeah.
And I think it's going to be a blow off top of epic proportions. You've got everybody singing the same tune. The Fed's going to continue to provide liquidity. You've got, NASDAQ stocks up at all-time highs. I would not be surprised to see the S&P, rip to, all-time highs. The Dow, and this is my chart of the day yesterday, by the way. I would not be surprised to see the Dow follow to all-time highs, and to see the NASDAQ, continue to blow off higher. And, Chi in our chat room said that the Fed has created this moral hazard of being able to, just continuously print money. And I think everybody's, obviously thinking the same thing. And so as stocks continue to blast higher, the risk is that we get some sort of blow off top, and you get every retail person jumping into the market, and I actually had, my wife was talking to her friend who is collecting unemployment. Listen to this. Friend who's in Nebraska that she's known since like junior high school or something. And I've known this woman for 20 some odd years since my wife met her. She moved to Nebraska with her ex-husband, and she's a big hot mess. But anyway, she's a friend of my wife's that she's known her whole life pretty much. Anyway, she was messaging my wife, and yesterday afternoon my wife goes, "Tell me about this chart." And my wife never asked me about the market. Well, she does, but not specific stuff. She's like, "Tell me about this chart." I'm like, "What chart?" And she showed me Hertz yesterday, and I'm like, "Yeah, I don't, I'm like, there's a lot of speculative buying going on right now, and it's hard to really justify what exactly is happening in Hertz." And I kind of explained to her the mindset behind it, and she goes, I go, "Why do you ask?" And she goes, "Well, Megan, my friend Megan, she's asking about it." I'm like, "Megan, who's collecting unemployment?" She goes, "Yeah, she's apparently she's looking at stocks right now." I'm like, "What?"
Blake, I know you think it is probably unimaginable, but I have a story that's going to blow your mind out. Yesterday.
Wait, hold on, really quick. I'm going to let you tell the story. But the point of the story is there are a lot of people that never deal in the markets that are currently in the markets right now, and that's scary. Yeah, and that's also one of the things that leads me to believe that we are probably heading. I had always thought that in order for this market to top, and this is pre-pandemic, that we needed some sort of blow off top, and I'm actually fearful that we're going to get it this time. So anyway, go ahead, Steve. I didn't want to interrupt.
Yesterday night, very frequently when I finish work, I go to walk a little bit, at night to get my body a little moving, So, I was a little bit hungry, so I stopped by, the nearby like souvlaki place to pick up one on the hand as I would start walking.
Did
So
you
the
say
guy,
Souvlaki?
souvlaki place, yeah, exactly.
Favorite
Good
thing.
exercise.
So the guy there is like, I know him for many years, we talk. So, as I'm waiting for them to prepare it, he's like, what the hell is happening with the markets, etc. And keep in mind, for those that are from the US and they don't know, it might be in the US mentality to trade into stocks, but it's definitely not in the European mentality, especially Greek mentality. So I'm like, why do you ask? And he's like, they called me just yesterday morning from a firm telling me if I want to invest in US stocks because, they're doing great. And I'm like, what? He's like, yeah, there was a guy that called me and he was, trying to persuade me like to put money and that I should be buying US stocks. And I'm like, seriously? He's like, yeah. I'm like, I never heard of that before. He's like, yeah. And I mean, I had to actually, hang up on him because he wouldn't let me go. I was like, dude, I have like a restaurant here and I have no idea, I've never invested in my life. And, and he was insisting. So just, take that into account.
Yeah, I mean, I think there's a lot of interest, in the markets, just globally, and I do believe that that we're going to be, that there's quite possibly we're going to see a surge to all-time highs, and that's why I want to say that is the risk, in my opinion. Will it happen? I don't know, and I'm trying to play it in the markets in the sense that is what is going to happen. So today, just to give you an example, I picked up some euro yen down here at 121.60, at the 38% retracement, a little bit above it actually. But anyway, because I look at the euro, and the euro's, in my opinion, still very bullish. Even though I think the dips are going to be limited in the euro dollar to 111.50. I still think that, even though we're getting a little bit of I could just call it consolidation for right now, I still think that, any downside is going to be limited to right here, as I told you yesterday, 111.50. And matter of fact, we might even be limited to just sub 112, which would be the 38% retracement. And if I'm correct about, the dollar yen bouncing off this neckline, then that means the euro yen, here on this 38% retracement is probably a good, good levels to be on the long side, looking for, moves back up to 123, 124. So, I'm just trying to approach the market in that idea that, we're probably going to get some sort of blow off top. And this is, there's the old sell in May, go away. Well, that's a seasonal, that's a seasonal phenomenon in under normal conditions. We're far from normal. 2020 is probably the most abnormal, hopefully the most abnormal year we'll have in our lifetime, between an epidemic, social unrest, asteroid hitting the Earth. Who knows what else is going to happen in 2020? But it has forced different behavior in the market than we might normally typically get. So, maybe there's a continued surge higher in equities due to other reasons, not necessarily, seasonal. Seasonal, I think, does typically weigh on the market, but, like I said, 2020 is not our typical year either. And that's something that we do have to take into consideration. So anyway, just some food for thought. But that, I do want to point out that I think a lot of these currencies, like the Aussie and the Kiwi, they are and continue to be overbought. But that doesn't mean that they can't continue higher either. I look at the Aussie dollar, and it is rejecting resistance. Big resistance at 70.35, and your natural inclination here is going to start thinking, oh look, Blake, there's a double top. It's not a double top yet. It's just resistance. That's just resistance right now. And the fact of the matter is, if we break through that resistance, it's going to be a pretty big squeeze, right? Think of it like the beach ball underwater. You're trying to hold the beach ball underwater, and it keeps knocking its head up against the, and finally you just let go of it, and it pops out of the water. That's the effect that we might get here if we start breaking out. But I think if you're long, you definitely have to be careful. But I think that we're getting a little stretched, so it's natural to see some sort of pullback / consolidation, at least at current levels. Are we at highs at highs in equities? Will we not go higher? Maybe this is it. I personally, I would love to see some sort of blow off top. That would be the best case scenario in the market. But hell, maybe this is it. The S&P just fails at the 88% retracement and we start rolling over. I wouldn't be bearish to the equity markets and the S&P till you're back below 3,100. You'd have to be back below this trend line here. And then I'll be, more confident that equities are done near term, and then we're going to make a lower high, and that we're not making new highs. But as of right now, we got to go with the assumption that this market is going to go higher, and that's again, you saw the composite, you see the NASDAQ 100, they continue to be at highs, so, and one of our traders in our chat room said, yeah, look at the Russell. I mean, the Russell's been really strong here. We break the 78% retracement. The Russell's going to continue to maybe lead the S&P and quite possibly the Dow. So I think it's important just to keep in mind that, yes, we're having a little consolidation today, a little pullback, and it can continue. I think while the S&P is above 3,100, you got to continue to believe in risk on, at least near term. Okay. All right. So Steve, do you mind shipping me a souvlaki sandwich, please?
Absolutely.
That would be, that's like my favorite thing to do in Greece, is just stopping at a souvlaki restaurant and just, sounds so.
What is it lamb, like a gyros, or what's the meat?
No. Gyros, that's more Asian. It's like more Turkish what you're describing.
Okay.
Gyros is either pork or chicken gyros.
Oh, okay.
Yeah.
So what's a Slovakia?
It's like a pie that you put ingredients in it, usually a meat.
Oh,
I mean, like gyros, as you said, and depends on what you like tomato, like onions, like French fries.
So good.
Yeah, I could blow it up to 250 living there.
Oh my gosh, it's ridiculous. Anyway, all right. Well,
Thanks,
hey, traders, I'm going to be passing it over to Steve. Stelios is still out, right? He's
yeah, the lucky bastard is roaming around on a sailboat in the gym.
Like Jason and the Argonauts.
Yeah,
looking for mythical monsters.
Yeah, I have Jason here in house. He has the Argonauts, as it seems.
All right. Well, good hunting, man.
All right, guys. Hey, thank you very much. And remember, guys, if you haven't, if you're not part of the community, make sure you join ForexAnalytix. It's only $1 for 10 days to try it out. And for those of you that are not happy with the broker that you're using, make sure you visit Forest Park FX. They are our sponsor of our webinars. And if you'd like to be part of the reimbursement program, you could be doing that to potentially be part of the ForexAnalytix family for free if you use one of their brokers, or if you live in the United States and you can't qualify for the reimbursement program, at least be getting cash back. So make sure you reach out to Forest Park FX. There's a couple links on how to get in touch with them. And Steve, Dale, I'm going to pass it over to you guys.
Okay, buddy. Good hunting today.
Yeah, good luck, guys.
Same to you, mate.
Hey, Steve, what's standing out for you today, man?
other than the fact that somebody was calling a Greek souvlaki owner,
Yeah.
telling him that he should invest in US stocks,
Yeah.
which is like unheard of. I mean, honestly, in the so many years I've been in this industry, I've never heard of companies calling like random Greek phones telling them to invest in US stocks. That's a first for me.
Steve, what do you think that break in gold down under 1680? It's come right back. Maybe that was just corrective, and now we are going to new highs. And
This is what I
gold
think.
and
If
gold
I
silver
haven't changed,
ratio is popping. You know, we could have a
I mean,
correction.
nothing moves in a straight line, right? I mean,
Yeah,
it already had a massive move from like 130 to, what
yeah,
did it go to? Let me see.
126 to 95.
95. I mean, come on, right?
Yeah, but that could be a big
129.
ABC.
Yeah, 129. It's perfect equality actually. If you see,
Yeah,
94, 99 was
yeah.
equality.
And it's back to the breakout, and the high was confirmed, and maybe that's just an ABC, and we're going to go to new
Maybe,
highs.
although so
Because
far,
I'm open to all of it.
yeah, although so far it's like just consolidating, right?
Yeah,
Nothing more than that. But having said that, just look at gold. I mean,
yeah.
does it look bearish to you?
It had a chance to be,
It had a chance to be, but
and now I
yeah,
don't. You know, I do take this one maxim more seriously than I used to, because I you know, have a tendency to be stubborn when I have conviction. But you guys need to write this down. If you don't learn how to change your mind, you won't have any change left. WD Gann. So if you're processing new action all the time and the charts say, well, we should have failed from here, and it doesn't, reassess, change your opinion. It costs you nothing to change your opinion. Okay, Steve, I'm sorry.
so yeah, so far there is absolutely no confirmation that we found a high, because even this move lower was extremely orderly, right?
Yes.
So you know, against last week's Friday's low,
Yeah.
I really think it's extremely dangerous for somebody to try to be short.
And
Now,
this
of
ties
course,
in with the US dollar yen top, in my view, too.
yeah, of course, if we rebound a little bit higher from a risk reward perspective, you know, somebody could be short, thinking
I
that,
wouldn't.
you know, at least we might have like, you know, more orderly pullback. And you never know. Sometimes, you know, you get in for a short-term trade, and if you're patient enough and read the tea leaves correctly, you might find yourself
One more
in a home
drive.
run. In a home
One
run,
more
yeah.
drive. New high would be the third drive. You see the
Yeah,
high in mid-April, the high in May, and one more would be a 3.
Yeah,
I rest my case.
it is likely, but one thing is for sure, as I've said many times, you know, I would be very, very careful being in the short side of all those, you know, of the two metals, etc. I mean, can they move lower? Yeah, absolutely, and they will eventually do move lower. But you know, where is the trend at the moment? Where's the longer term trend for gold? Undeniably, it's higher. I mean, gold is the metal that has produced all-time highs against, if not every single currency besides the dollar.
Yeah.
Yeah, I'm not 100% sure. There might be one or two more exceptions, but you know, against like the vast majority of the currencies, gold is at all-time highs, or was hitting all-time highs until a few days ago. So, you know, this is a market that has, you know, bull market
Okay,
written
I
all
get
over
it.
it.
You love it. All right.
Now, silver, if you,
Goldfinger.
yeah, silver,
Silver's,
if you look at the long-term chart,
yeah.
you know, it's not in a bull trend. Of course, you know, the rebound from the lows was, you know, amazing. You know, but for somebody to make the argument, you know, that it's centering a bull trend, you would have to at least cross through, you know, this descending trend
18.
line resistance. I would say almost 19,
Yeah.
you know, to produce a higher high. Now, having said that, you know, silver is not in a confirmed uptrend, I will have to reiterate once again that even after this, you know, massive move higher, silver is extremely undervalued, historically speaking. And even after this, you know, huge pullback in the gold-silver ratio, we are still at extremely high readings in the gold-silver ratio. We were just at unprecedented levels, and now we're just at extremely high levels in the gold-silver ratio. So anyway you look at it, yeah, it's not a good area to buy silver from a risk-reward perspective and from a technical perspective. But if the market gives you the ability to buy a decent pullback, in my opinion, it's a no-brainer. Especially, I find it amusing that sometimes you find people that their main theme is don't fight the Fed, but at the same time they're like bearish the metals. How the hell can this happen? I mean, how can you be in favor of not fighting the Fed, against fighting the Fed, and not like monetary metals? Because what central banks have openly said they want to do is create more inflation, and they're printing money like it's going out of fashion. I mean, just the Fed within the last 6 months has doubled its balance sheet. And after the previous experience with Bernanke, obviously, I mean, I was saying it since back then, but I think now everybody realizes that after lying to Congress that these were emergency measures and they will unravel them and contract the balance sheet once the emergency is over, and it took them 11 years to start shrinking the balance sheet, which they managed to do for a few months before doubling it again. I think that there is nobody naive enough to believe anymore that there is an exit strategy from central banks having to do with balance sheet expansion and monetary insanity. I mean, it was more than proven that there is no exit strategy. If you can't manage to exit this type of monetary policy after the longest expansion in history, okay, what are the exact conditions under which you assume you can exit? Because, I have no idea, and I don't think there is a valid answer or an answer that makes sense in that question. So, going against monetary metals in the long term, it's really fighting the Fed and, the rest of the central banks. Now, prophetically, I said yesterday, when we were just reversing the USD yen, that listen, I'm not interested in participating in this thing, simply because if it has managed to get a PhD in something, during the past few months, is blowing up people's accounts by producing, false moves and false hope that it might start moving. Blake made a valid argument in the short term that we are indeed backtesting this area of like 9-10 days of consolidation that we had. I mean, that was an amazing thing, until last week we had the USD yen literally having flatlined. I mean, if I remember right, the range of daily closes for like almost 10 days was something like 30 pips. So, once this market wakes up and explodes higher, it manages to go from like below 108 to almost 110 in 4 trading days, and then it gives all back in 1.5 trading days. So, good luck trading this. From a risk reward perspective, looking at the short-term chart, Blake has an argument here, and he's right about it. Perhaps trying to buy this retest of this consolidation area makes sense. But if you ask me, looking at the longer term chart, nothing makes sense here. So the only thing that in my mind that makes sense is staying as far away as you can. I mean, that's my point of view, having to do with my time frame and the time horizon I want to take trades. I mean, I totally understand that if somebody is willing to go in and out of the market within like 3, 4, 5 hours, it's a totally different way of viewing this. So, it makes a lot more sense to buy or sell even, such an abysmal market like this one, if you're looking to exit, shortly. Now, Blake also mentioned, and I'm going to mention it because it will be one of the markets I wanted to talk about. If you remember yesterday, during the webinar, the euro yen was somewhere here, like 123.50, somewhere there. And I said in advance that, listen, it looks to me that this market wants to roll over it's very likely that by the end of the day, it's going to produce an evening star formation. By the way, we got that more than enough. Actually, we got more than needed in a bearish candlestick to make this an evening star formation. By definition, it would be required for this candlestick to close at or below the mid-range of this candlestick, the one we had 2 trading days ago, and we almost retraced all of it. So, nothing more needs to be said about that. Now, the move higher was clearly quite impulsive. So, I do understand why somebody would want to be buying the market at the lows, because we were about to test these areas, these highs there. And we've already seen a nice reaction. But on the other hand, I can't also ignore that this was quite a massive reversal candlestick. So I wouldn't be surprised, now that we've confirmed that there is some type of a high, to see something like this playing out. So I'm not saying that this market can't continue higher. It has a decent chance of doing so. But I'm saying that I would be very, very careful and very, very skeptical to try to buy it just 1.5 days after it rolled over. Keep in mind that this market produced a 1,000 pip move to the upside. Okay. Now, nothing is unlikely, but ideally I would want to see, either a consolidation here or a little bit of a deeper correction, before getting interested in getting involved. Of course, the more strict criteria you set in place, the lower the number of the trades you're going to take. But from my experience, it's like choice between volume and quality, and I'm absolutely fine with that. So that covers also the euro yen. Now, we've seen a very nice attempt from the commodity currencies to roll over. Blake already mentioned the Aussie. As I said before, it's a bearish engulfing. By the way, here's the definition of a bearish engulfing. As you see, black real body wraps around preceding white real body. Wicks don't matter. That's in an uptrend, and the exact opposite in an in a downtrend when we're looking at a bullish engulfing. That's just because I remembered, the conversation we had prior to this. So clearly, since there is no gap here, this is an FX market. FX can, under normal circumstances, gap only, after a weekend. So this is not a bearish engulfing, but it's definitely an outside black candle, because we did move higher from yesterday's highs. If you remember, during the webinar yesterday, I warned that we're clearly seeing some loss of upside momentum. Then we had a decent day yesterday, but I think we're experiencing this now. So already pulled back. In essence, we've retraced almost the four prior trading days at the lows. So I think, you should be very, very, very careful from here. Now, at the very least, a retest of 68 cents would be needed, like retesting this channel. But keep in mind, also a pullback to 66.60. Previous breakout area, 200 daily moving average, horizontal support resistance area, this descending channel trend line resistance, so that it was a triple confluence of resistances. I think it can act as a magnet, to pull back the pair to that level. Equivalent kind of, pullback we might see in the Kiwi. The formation is not exactly the same, but I think that we can see a continuation. First area of support will be 64 cents. We have at 63.15, we have the 200 daily moving average, and then we have 62 cent area is quite an important one. I think we can easily end up retesting that one. USD CAD, USD NOK, USD SEK, also trying to produce a low, because the USD is the first component here. So they're working in reverse. So here's the USD CAD trying to produce a nice morning star formation. I warned in advance, if you remember, that you know, 133.20 would be a strong support area. We didn't make it there, but in any case, you know, I was expecting for quite some time now that USD CAD would turn higher. Of course, is half a day enough to confirm a turn higher? No, we're still just back testing the 200 daily moving average. So it's premature. USD NOK, if you remember, I said since yesterday that I expect that some kind of a reversal might take place from that area. USD SEK, same deal. So we need a little bit more confirmation, but I think that there is a decent possibility that the market is going to be reversing here. Now, the next question is, okay, reversing, but reversing for how long? Just like a couple of days reversal or something more than that? I think it's likely to be something more than that. I mean, the signs are there. According to all the metrics, here's an interesting view. And the reason I'm going to focus more here on stocks as a sign is because, as I've been saying since quite some time ago, after the Feds and the rest of the central banks intervention, which was out of this world. I mean, they've intervened like, you know, so many times in the past 20 years, but they took it to a whole new level. Now, what they created with that was making more or less the vast majority of the financial instruments one market. So everything had to be, in essence, you know, categorized as risk on, risk off, even currencies. I mean, even currencies like the cable, in some respects. And then, you know, trading according to that. So you can see here, you know, I had screenshots of each of those metrics separately, but you know, somebody was, this Crescat Capital, whatever, was kind enough to post it on Twitter. So I thought it's a good idea to have it like in combination. So you can see here, you know, so many metrics, percentage of, you know, stocks above their 50-day moving average. As you can see, you know, probably at all-time highs. I was monitoring, and I think I showed this actually a couple of days ago on the webinar, like it was Friday or whatever, the put call ratio. It's at multi-year, something like 8-year lows, you know, extreme bullish reading. You can see the percentage of stocks with their RSI above 70. It's, you know, at highs we've seen, you know, very few times in the past. Add to that readings like the DSI. The DSI was yesterday at the close, if I remember right, it was like 92 for the S&P and 93 for the Nasdaq, or 91 for the S&P and 93 for the Nasdaq, which with maximum of 100 and minimum of 0. You know, whenever you get readings in the last percentile, I mean 10%, like, you know, above 90 or below 10, you know, those are extreme readings. So, you know, in combination, everything points to, like, you know, extreme readings. Given, I mean, I'm not even discussing the fact that fundamentally speaking, we have an economy that still has like tens of millions of unemployed people, huge uncertainty about what's going to happen with the pace of reopening the economy, if the economy can stay fully opened following the return of, you know, worse weather and flus and viruses, with that, you know, increase the chances that coronavirus is going to be transmitted, you know, easier, you know, starting September or October, worst case scenario. And, you know, all those, even, you know, if that doesn't happen, how easy is it for an economy to go back to 100% after being shut down, in essence, for a period of months? Not considering the fact that this quarter is going to have the worst GDP reading we've had in history. Expectations from the Atlanta Fed at the moment is for a minus 53% on the quarter. And, you know, so since everything has become one market, here's the Nasdaq, by the way, a little bit of an overthrow from this ascending wedge. You know, I'm not saying that insanity cannot continue for longer, but what I'm saying here is that, you know, they're long overdue for at least a decent pullback. I mean, under the current circumstances, I wouldn't be surprised if the uptrend continues. But I think that in any case, the market has to first punish some of the weak hands, some of the FOMO chasers that have been staying out of this market for the vast majority of this rally and then decided to jump on board, very late, because, that's what the market likes to do more frequently, inflict the maximum amount of pain to, as many participants as possible. So considering that everything is one market, considering that it's very likely that we're going to see a pullback, I don't know what the catalyst is going to be in stocks. You should expect that if that's the case, you should see continuation lower in the Aussie, in the Kiwi, in the Canadian dollar. So, inversely in USD CAD moving higher, of course, in the Norwegian kroner, and you name it, any type of commodity currency, they're all associated one way or another, more or less with, risk. Now, another instrument we talked about yesterday that it is likely attempting to top is crude. You can clearly see here, yesterday, the market produced a gravestone doji, right? So we have quite a bullish day.
I drove by the cemetery yesterday.
Yeah, and then we reversed lower to close unchanged, which was near the very lows of the day. So far today, we're seeing like a pin bar, but it's more than clear here that the market is at the very least consolidating its recent gains. Now, keep in mind that if indeed we turn lower in risk, you should expect crude to also fail from here. At the very least retest this steep ascending channel trend line support, but very, very likely to even see lower levels.
Last time crude led by a wide price and time margin. So
yeah,
maybe again.
It frequently does.
Hey, Steve, I have one question, and if you could answer this, I'm going to give you a gold star. Why is the market so mean?
With whom?
With everybody. With everybody, man. Mr. Market's why is he so mean?
You know how it is. It's a tough game to play, and admittedly, I think I think that these markets that we've been living through the last 20 years, but getting worse by the year, are built mostly for people to trade without thinking about it. You know what I mean?
Ziggy came up with a good one.
What did you say?
Because the market is always trying to go to the mean reversion. That is really good. I think I know what his tweet will be tomorrow.
It's a good joke, but unfortunately, the problem with this market is that it has completely...
There is no mean reversion.
Yeah, exactly. That it has completely abandoned the idea of mean reversion, right?
Yeah.
That's the main problem of this market, that with all the manipulation, the whole concept of mean reversion has gone out of the window completely. So there is a question about USD Swiss. Listen, I warned in advance about USD Swiss. If you remember, I had warned in advance that you should be very, very careful because the Euro Swiss was strongly moving. And, when you have the Euro Swiss strongly moving one direction or the other, that affects how much the USD Swiss market is going to be moving to the upside or to the downside. So the Euro Swiss will be acting either as a tailwind or as a headwind.
Remember, I talked about it at the bottom, being the quiet, depressed market. I was looking for 108. So, yeah, it's that was a classic example of never sell sleeping market. Remember, you were talking about if you're going to trade that, you have to triple the leverage.
Yeah.
You could have just said regular.
Traditionally, it moves very little. That's why.
Yeah.
Having said that, Euro Swiss was what it was preventing the USD Swiss to break down with confidence following Euro USD higher, and oppositely, now that it has reversed lower the last couple of days, it is what is actually helping USD Swiss continue lower from this triangle, despite the fact that Euro USD has been pulling back. So as you see, the last 3 days, the correlation between Euro USD and USD Swiss is positive, and that is due to the fact that Euro Swiss is pulling back. Okay, so whenever you want to trade the USD Swiss, you want to ask yourself, what do you expect the Euro Swiss to do, and then decide what you want to trade. You want to trade the Euro Swiss, or you want to trade the USD Swiss, or you want to trade the Euro USD. Now, purely focusing on the technical here, the USD Swiss has broken through this triangle, trying to bridge through the 50% fib here. The next downside area of support is at 94.50. It's a 61.8. So it looks like that's what it's good, what it's doing at the moment. A lot of comments about Souvlaki. The best one from DJ. Souvlaki is a great 3 a.m. after bar snack. Couldn't agree more. Any review on FTSE 100? Yeah, FTSE 100 found resistance. Guess what? Guess where? At this ascending wedges trend line resistance. I mean, I drew that quite. Yeah, I drew that quite some time ago.
What a coinkydink.
If
I know. See how it still surprises you, even though you've seen it happen a million times, on how lines can be like magnets.
Yeah, they can.
But I know I still get a kick out of it.
Yeah, and very nice rejection so far. Yeah. So I might have been off a little bit on the timing and where it would meet the trend line. Yeah. But I do think that the chances that it's going to work out exactly as I drew, meaning, after finding resistance, it can turn lower and, turn considerably lower. I think that scenario is still on the table. Same thing with the DAX. The DAX had a nice overthrow from this ascending channel, and, quite a beautiful rejection following 1.5 days above the channel. So obviously, from a risk reward perspective, being long here, the DAX makes very little sense. I know that it's hard to be short in the sense that, you see what's happening, you see all the FOMO from central banks, etc. But I'm telling you that being long, especially after today's reversal candle, if it ends up being more or less what we're seeing at the moment, it's not a good idea for the next at least few days to be in the long side. I think that at the very least we should see, several days of a pullback. At least, that would be considered somewhat healthy. Of course, what's left to be healthy in this market is another conversation. Not a lot, admittedly. Currencies usually equity market movements, Aussie yen and Euro Aussie, please. Yeah, Aussie yen, as you understand, double whammy for the Aussie yen, right? I mean, the USD yen turned lower yesterday. And today, both the Aussie and the USD yen are moving lower. So already almost a 2% move lower in the Aussie yen. Guess from where? I warned in advance about that from the previous highs. I told you, even yesterday, I told you that, listen, be very careful because, we need to produce a higher high to confirm, a return to something, to a bullish case scenario. And, we got rejected from here, at least initially, right? So, an attractive zone to try being on the long side again, I would assume would be the 72.50 area. Horizontal support resistance area, 200 daily moving average is there. So I don't think we're going to stop after just a single day of a pullback. So, look lower towards 72.50. Kiwi yen, not different as you see. A little bit of an overthrow from this ascending channel trend line resistance. We also overthrew the equality target of this first leg higher to the second leg higher, which was at 70.16. I think we can easily pull back for a few more days. So, also if you want to be buying those, in my opinion, don't do it yet. Now, the question you had about Euro Aussie, it's obvious, and we've said that many, many times, that once the market went a little bit in the risk off, there would be a respite for Euro Aussie, Euro Kiwi, Pound Aussie, Pound Kiwi. We know that they're inversely correlated to risk. So quite a nice kind candlestick so far. It's more than 1% higher on the day. First area of resistance is a little bit higher at 63.30, so like 30 pips higher. We cross above that as well, and I think we are opening, some upside targets for a bigger squeeze. Now, if you look at the rest of the pairs I mentioned, they don't look differently. I just wanted to pinpoint what is obvious. We had, said it many, many times ago in the previous weeks. We said that, listen, the VIX is not playing ball. So I wanted to show you once again the 4-hour chart in the VIX, and this is it. So, VIX had already started producing divergences. So be careful because, confirmed breakout from here in the VIX. I mean, there
What's
was
the recent low, Steve? What was the recent low? Under 24?
23.5.
Right there?
Yeah,
3.5. Okay, but it didn't close there.
No.
That day where to close.
No, we never closed below 24 actually.
Okay, that was my line in the sand. Okay, cool. Yeah, and
Yeah,
it's come out there. Great look, man.
Yeah, so be careful because there was clearly a loss of momentum in the VIX to the downside. I wouldn't be surprised if what follows from here is, even if it ends up being a short-lived move, it can prove to be an explosive move higher. So
40's not even 38% back, is it?
Yeah, 40 is easily 40 can be done within a day.
What is it? 23% back from 80?
It doesn't really matter. We can do it in zero time. Literally.
I'd like to see the fibs on it for targets.
Sure.
And I'm sure our trading warrior brothers and sisters would like to see some targets here based on fib retrace. Right, guys? I am the host. I have to boss Steve around, make suggestions. Usually I'm outside, having a Bloody Mary. Let's see.
38.2 is the 23.6% fib.
Yeah.
The 38.2 coincides more or less with this horizontal support resistance area at 47.
Yeah.
So 47 is a 38% retracement.
Yeah.
We can easily squeeze there. Easily.
Yeah.
In a matter of 3-4 trading days.
I mean, that's the type of thing you take a shot with, maybe the 30 calls in August or September, so it could be in the money by 10. Anyway.
Yeah.
Just a thought for,
Who do we have today for an interview?
Trading with their unemployment check and buying Hertz, and it went up 10 times. You could buy some skulls. Actually, I was planning on interviewing Vinny, the E-mini, but I think he is now in micro because he's now a no-show.
Oh.
Vinny,
okay.
the E-mini, is now trading micros, and he's also a no-shows.
Okay, he's lost.
Yeah. You know what, Steve? Check this out. So, I like to, I believe that not just because you have a lot of followers doesn't mean you're a good trader. It means that you might be a great marketer. And that's what I try and do here on Face. Vinny has 53 followers, but he also has, website. And I like to give people a hand up and maybe get them some visibility, some business. And maybe he was just too nervous to do it. But just to show you guys that you're going to find a lot of diamonds in the rough that don't have a ton of followers. Okay,
that's very true.
I'm just saying that you could be a great marketer, like a Harry Dent who's been wrong for 4 years, sell millions of books, but it doesn't mean you're going to make money following their, thesis that they've had for decades. So,
speaking of which, I think we should have Harry Dent in the next event in September.
Okay. Yeah, I interviewed
him. Are you up for it?
I sure. I interviewed him a few times on FX Street. I don't know if I could get him.
We'll get him.
Okay. But yeah, okay. To me, he's my Henrik. Capiche?
Yeah.
All right.
Absolutely.
All right, buddy.
Enough said.
Or Kip. He's Henrik and Kip multiplied by 10. Anyway, so so thanks everyone for hanging out. And maybe today, if you haven't and you think we help you every day and you look forward to this, you guys can skip taking a trial and just sign up, because if you are a member right now, as we sign off, you could just go into the members chat room, see what Blake and all the pros are up to, and Steve's in there. What if you have a question in an hour and you're trying to learn? I'm not talking to all the pros that have all the answers. Or you want to know what some of these guys, Steve's thinking 2 hours from now. Well, I think it's worth every dollar then for you to be able to collaborate more than this is free, and it is a great service, but the markets run for more than an hour. Okay. And a lot of turning points happen mid-session. You could be in the chat room. So really, if you're serious about your trading career, there's no downside in taking this. You're talking a matter of a handful of pips. Okay, so Steve, that's a wrap. So don't just count your pips, everyone. Count your blessings. Invest in yourself and become part of our community. Thank you, Skip. I'm glad that you enjoy it. You love the service. That's all you need is love. Okay, Didier's saying, I confirm, join. Got plenty of good tips and exchanges with great guys. All right, Steve, have a great afternoon, buddy.
You do, and
All right,
everybody else.
see everyone tomorrow. Good luck the rest of the trading session. Adios from ForexAnalytix, the best team, the dream team on the net, in my extremely accurate and humble opinion. All right, see you guys. All right, bye.